Yeah, so hold on here. So this is the sales revenue and also the gross profit, the highlights of the HY1 performance as compared to year over year, the same period, HY1 2025. So you can clearly see there is a jump in the sales revenue 35%, gross profit by 34%, operating profit 21%, PBT 7%. There is a slight decrease in the profit after tax, and there we will explain you why it happened. And EBITDA has gone up by 9%. So these are the growth figures. Next. Now, the key highlights, if we have to see for HY1 this year versus last year, the revenue this year was 5.270 million OMR, which is 35% higher. GP margin, it stands the same 22% as compared to the last year. There have been some, inclusions in that, and due to that, it has remained same. Profit after tax stood 0.300 million, which is a marginal decline. The reason being, in fact, we have gone little conservative this year for higher provision for receivables. There are interest expense liabilities, which in terms of the revision of lease term. So I think there is a revision of lease term for our factory premise. And due to that, the impact has come in terms of the increased expense on the lease liability. That is one part. And higher income tax provision. Last year, there was a slight error in terms of HY1 projection of income tax. So if I compare apple to apple, so this has impacted in terms of our profitability. Otherwise, if we compare on the same terms, the profits were around 0.575 million, right? And fourth important point is that improvement in Alhail operations, which we are running since last November consistently without any stoppage or disruption. So go ahead, Vikas. I think you explained the finance figures.
So this is the critical ratios we are presenting here. Cost of goods sold, our cost is nearby the same level maintained. GP margin is same despite of our overall profitability is increased. One factor, as our CEO said, that is a lease liability impact. It is impact almost 1% bare minimum in our gross profit margin. And if we see the general and admin expenditures, these are slightly increased. There's certain factors like incentives, bonus,
IT investment,
and IT related expenses we increase. We are going for certain other IT enhancement in terms of the more real-time availability for the sales team and all. So that's the impact in increase. Our operating margin is slightly declined by 1%. If we see selling expenses, we reduced as compared to not only absolutely we are not reduced, but in terms of percentage, because our sales is increased, that's the impact is here. Otherwise, it is the same. Net profit margin, that's the impact we already explained. Our this year bonus is impacted and our IT related expenses we increase and provisioning slightly just because of to maintain our IFRS requirement also, and the payments are coming in irregular manner due to war situation. That's why we are going for a safer side and compliance with the IFRS also. And here the EBITDA margin, it's a 16%. It is declined by 4%. Just impact we already explained to you. These are our income statement. So we can see here clearly in finance charges, that is what we said about that lease liability and provision for doubtful debt, as we explained to you, as well as in here general and admin expenses.
Income tax also.
Sorry, income tax expenses last year, we are assuming our previous year losses of associate company will be covered. That's the reason in FY 25 they had not taken in H1 sufficient provision. That's the assumption. Ultimately, we have taken that in Q4. That's why this year we are going proper manner on month basis. That's the impact. This is our admin overhead breakups. Rent and utility expenses, employee benefits covered that bonus impact, what we given in FY 26.
So rent and utilities
That's related to lease liability. And rest expenses, if we see that are maintained more or less, only office expense slightly increased, very slightly, that's a nominal impact. And just
material. Next.
this is packing expenses. It is same, but maybe in future it will increase due to war. It will be impacted, it increased. Somehow we maintained in Q1, H1, but now it impact will affect in future operations slightly, not maybe we are expecting the managing the alternate sources and trying to control the cost. This is our current position.
Change follow, no?
This is balance sheet related presentation, means asset and capital side.
Somebody is waiting, can you admit? अरे वहाँ है ना admit. Your screen sharing is showing there where it is on. Stop sharing करके दोबारा कर लो ना.
Stop share.
ठीक है. अरे क्या कर रहे हो? Stop share करो ना. शेयर करो. ठीक है रहने दो. उसको साइड से होगा. नहीं. अरे यार वो नीचे आ रहा ना एरो. नेक्स्ट.
This is our cash flow position.
आप बताओ कैश फ्लो डिक्रीज बिकॉज ऑफ डिविडेंड या व्हाटएवर.
This is cash flow, our decrease just because of certain outflow increase in our investing activities and
फाइनेंस.
financing activities. We paid in dividend this year. 220,000, that is a major element. And lease liability, as we said, it was increased and extended till
I think majority of the difference is apple to apple. Everything looks same. The cash flow is impacted because of dividend being paid, which was not there in last HY1. So that has impacted. Otherwise, if you see in terms of the activity and generation of cash, I think it is as compared to last year, much better situation.
And one more addition, sir, the income tax we paid last year, it was not.
Yeah,
So 97,000, that is.
fine. Next. Yeah, 97,000 income tax paid. Now, if I have to talk about what are the present challenges, you all are aware that the region is going through a very disturbed geopolitical situation. So while it has given us a lot of challenges, it has also given us opportunity to list down the challenges. I think shipment, getting your raw material or the freight charges, logistic cost, everything has gone really 3 to 4 times up. And the impact is to the tune of around 40% increase in your packing, increase of around 2 times to 3 times in your logistic cost. The shipment cost is so high that we have to literally stop our or drop our business in countries like Qatar, Bahrain, Saudi Arabia, and these places. The cost of shipment is even costlier than the cost of goods. So this is not a viable situation.
5 times.
So
From it.
I think that is something wherein raw material is impacted, inflow of raw material and also finished goods logistic. That is the major impact which has come. Even the vessels which are coming from Spain or Italy or from China, there is no surety or certainty that it will come on a certain dates, and you are paying very high demurrage charges and also storage and other war charges and surcharge what the shipment companies are charging to us. So this is the challenge what we are facing. And also, as we explained in the first part of our presentation, the money rotation is poor in the market, wherein while the receivables are slow, I think the suppliers, because of this urgency and also scarcity of material, they are insisting for faster payment or shorter credit terms because there is no material of packing or the other. So if you are really looking for getting those material, you have to pay extra and also pay little faster, not like earlier we were taking 120 days or 150 days of credit. So this way, these are the challenges for the present situation. Next slide. If I go opportunity also has come a long way in terms of because the same shipment charges are very high for the Indian tile companies or Chinese or that way Iranian or any other importing companies which were there in Oman. So this area has really got benefited by cheap imports not coming from these countries. This has given a lot of opportunity to local manufacturing players to strengthen their market. And the same impact is UAE because UAE is fully covered by road from Oman. And that's not a place where the shipment is required. And that's why, to and fro movement from UAE market is very good. And presently, most of the consumption happening in these two markets because there is a scarcity of material which is not coming from other market. But nevertheless, we are also having impact of the giants like RAK Ceramics in UAE, then very cheap producing company from Saudi Arabia that even after paying a very high freight, their landing cost is cheaper. So these challenges will continue, but opportunity-wise, I think majorly if China and India not coming, complemented by anti-dumping tariff, which was implemented by Oman government, and also we are yet to see the quality mark which has been made mandatory by Oman government for any tiles which are getting imported in Oman. Because as soon as these, implementation came, the war situation started. So we really don't know where, how is the implementation part, but these are also some barriers which is positive. And even if in future, if there is, normalization, this will help us in strengthening our local market. Now, internal factors which, if I have to list down, is value-added items. What we have been launching in Al Maha, we have been, targeting the mid-premium and premium segment of customers, and really replacing all Italian and Spanish tiles in that segment. Now, new and innovative product is that we have gone one step further from R11. We have gone the top best quality and certified tile R12 anti-skid tile. We are promoting more of our antibacterial, antimicrobial tile, and cool tile is also getting popular very much in the region because of very high temperature, and it is also giving us a good brand image and also penetration in this market. Now, most importantly, if I have to tell how we are looking at this market, is the operation of Al Hail. As you all know, that the market is having a high potential of porcelain tile, and it is a highest growing segment in the ceramic tile, market. Now, porcelain products coming from Al Maha not only giving us a extra market or additional market, but also complementing sales of our red body tile, which is a low demand, and also where you have to push the product to in the market to sell. So there also we have not remained on the lower strata of the market, where competition is really pushing everyone with the base products of 60 by 120 or just 60 by 60. You can see that Al Hail has gone ahead and introduced products like 60 by 120, 20 thick, which is, we are the only company in Oman to produce this, and also 60 by 60, 20 with 11 type of surfaces, which is not available with any of the companies. So why we are going on a premium segment or a mid-premium segment? Because we know the future is going again, it will be going to be a bloodbath in the base category segment. So unless you create a market from today in terms of your value-added segment, you will not be able to survive. With also the fact that Al Maha is going for expansion at Sohar as well. So going forward, end of this quarter, we are hopeful to start our line 2, which will double our capacity of Al Hail. Line 2 will not only give us these products what we are already producing, but also it will give us some of the products which I think very selected companies in the region have, like RAK, which is technical or full body porcelain. Now, full body porcelain is very highly in demand in Oman by ministry, because most of their requirement and specifications are full body porcelain, which they are presently importing from India, because there is no made in Oman product. Now, proudly we can say that made in Oman, we are the best in terms of our product basket, and we have all the products what any site will need. Next. So this was a small brief. Can you just start the camera? So this was a brief on our, business operations for the last 6 months as compared to the last year. I'm sure you all will be having a lot of questions. So you can raise your hand and can start asking question one by one, and we'll be happy to answer all of you. So we all are in mute. So whosoever is asking question, please raise the hand, and then we can start question answer. Yeah, so there are Shaur Vision Capital. So let's start with Shaur from Vision Capital, followed by Sandesh Shetty. So yes, Shaur, go ahead, please.
Uh, Good morning, Mr. Singh. Thank you for the presentation and for a brief of the industry and the presentation. Congratulations on a good set of numbers. I had a couple of questions, and to begin with, the provision for doubtful debts for 128,000 that you recorded this quarter or in the first half of this year, how recurring is this number? Because we have seen there's a significant increase in your receivables um, year over year and quarter over quarter as well. So the receivables are piling up. With the provision for doubtful debts increasing, is there a reason to be concerned about the high receivables?
I will answer to this first. See, if we are talking about high value of receivables, I think this is very obvious that when you are starting porcelain and from one line which is a capacity of 200,000 and a consistent sale of around 150,000, the value of those quantities is much higher than a ceramic tile, which is average being sold at 1.5 or 1.6 real or OMR. And as compared to that, the average price of porcelain is 2.8 to 3.2. So their impact is double. So when you are increasing your business, your receivables are going up. But nevertheless, if we see our, comparison, the days of sales have come down drastically in terms of our collection. Quarter over quarter, the days of sales have not only because of high revenue, but also because of good collections, what we are getting. Now, doubtful debt is something like, there was a discussion with our auditors that, if we really see the peers in our industry, you will have a very clear study of that there is hardly any doubtful debt, even though the customers are paying very late or customers are, their money is stuck for more than 1 year. So that way, analysis was more on customer-based risk analysis, and based on that, the risk provision was being done. Now, following IFRS and also the geopolitical situation, we decided that it is always better to go a little conservative. Whatever the numbers you are seeing is 100% collectible and money is coming. For example, there is a disruption of business, suppose in Saudi Arabia, the customer is not ready or able to pay in one go. He is paying like 25,000 Saudi Riyal every month. So even if we know that we have got a certain payment which is sure short, but since it is crossing my 6 month or 270 days, which is our internal policy, or 1 year, we have to take it as a doubtful debt. So I think going little conservative was something. If you see industry-wise, apple-to-apple comparison with the peer analysis, we are the, I think, most conservative in terms of taking that. So there is nothing in terms of the concern. And I'm sure when you see the cycle completion, because last 4 months, our porcelain sales have gone double fold, because the line which was 50% utilized, we have gone for 100% utilization. So the cycle of revenue collection will be completed in 90 to 120 days. So you will see the cycle completion in the coming quarter. So that will answer your queries and other things.
Perfect. Thank you for the explanation. It makes a lot of sense now. My second question is on the porcelain front. So, Al Hail is obviously now operational, and you said that the line two will be operational this quarter, if I'm not wrong. So, how much contribution should we be expecting from this? If you could give us a ballpark number in terms of how much increase in sales as a percentage.
I think revenue-wise, while the revenue is showing very high, our share of profit in terms of management agreement is 3%, which is like, whatever we are selling, we are getting 3% out of it as a net profit, which is appearing in our book. So suppose we are doing 100,000 business, we are getting 3,000 as our profit in that. So this is a very, the arrangement, rest of the money is going back to Al Hail because they also require money to stand up and also clear the old issues so that the plant runs successfully. So while Almaha is sacrificing a lot of its, share of profit, but present the challenge is that penetration of the market, sustaining the market, and also, making Al Hail run successfully. So that way, I think it should clear your question if I'm not wrong.
Yes, sir, it does. Thank you. And just in terms of quantity, if I'm not wrong, you had mentioned previously that after the line two, Al Hil's contribution in terms of porcelain quantity should be around 300 to 350,000 per month, if that's not
You're
wrong.
talking about quantity in terms of a square meter, yes.
Okay,
Value-wise, it will go per month approximately 700 to 800,000 real.
great. Okay, thank you. That helps a lot. And is Al Hail actually breaking even on, or will it break even after the operation line two?
So this is like a long way to go, Shaur. As last meeting also, the same question propped up. But you know the liabilities are, very high. Now, bank is also waiting and watching us, like, how the plant operations are happening, because this is the first time ever since this plant was commissioned in 2018 that it is being run successfully, consistently for almost like 9 to 10 months. Despite challenges like we are getting it from Ministry of Manpower, our old, cases, very low cooperation from authorities in terms of recruitment, but still we are able to run the plant, beating all challenges. And I think making break even, I think let the plant run for 1 year or so and line two, because this plant has 4 lines, Shaur, and you are presently in terms of capacity utilization is only 25%. So unless you go 50%, there will not be a money to pay back to the bank and start clearing your debts which are there. And then we think about having a roadmap in terms of when are we going to make the break even.
Right, thank you, sir. And on the ceramic side, what is your capacity utilization currently in
Currently,
in in first half and this quarter? Yes.
last 3 months, our capacity utilization has gone up to 95%. From last year, around 58, 60%, it is now 90 to 95% approximately.
Right, and because of the increased costs of raw materials or increased logistics, has there been any increase in the selling price of ceramics that
Of
you
course,
foresee?
of course, of course. In fact, we were the only company to push the sales increase. See, there are two attitude in the market. One is that prices are going up, so you book as much order as you can and get it at the old price, which competition has done. Rather, we were the only player to have gone very boldly in the market and tell that our cost is going up, so we are increasing prices, taking a challenge. Even if we are taking a beat in terms of customers getting deviated to competition, we will hold on, because we cannot take this cost into our profit loss. So that way we have revised our prices twice, both in ceramic and porcelain, and well accepted by the market as well.
Right. Thank you, sir. I'm sorry, I'm taking a lot of your time. I know that other
I think that
questions are
will
also
take
in
care of
line.
a lot of questions what others also have in mind, because you are very specific in your questions. Never mind.
Thank you, sir. My last question is regarding the product mix of the industry, and that's on the industry as well. So you mentioned that porcelain is priced almost twice as much as ceramic. My two questions are: one, are there any local competitors, local manufacturers of porcelain other than you or Al Hail? And secondly, how do customers value porcelain over ceramic tiles? The market share between the two.
Okay, so coming to your second question first, the porcelain is the fastest growing segment in the ceramic. Because ceramic and porcelain both comes under the family of ceramic. One is red body, one is white body, and porcelain is which is like a impervious material, and porcelain is something which is a very low water absorption. So I think if I have to talk about market, the demand is extremely high on porcelain. So there is a pull from the market in terms of porcelain, where customers are coming and asking for porcelain because of high strength, high durability, larger size, better surfaces. But I think potential wise, if we have to say, 70% of the market is porcelain and 30% ceramic. And if we talk about commercial projects, 80% is 85% is porcelain, and around 15% is your ceramic. So that's the mix of the market, and it is like every year the pie is growing by around 7 to 8% of the total potential. But at the same time, the growth or the demand potential of porcelain is much higher as compared to ceramic, because while ceramic volume is going down, porcelain demand is going up. So this is your second question. I'm sorry, what was your first question in terms of local competition? Okay. There is one company which is there, which has got one line only, and they are on into the base products, and they are also in the market, and complementing the demand of the porcelain in the local market.
Great. Thank you, sir. And just a small follow-up. So the competition for ceramic, because of the anti-dumping and the quality standards, has reduced quite a lot. Is it the same in the porcelain as well, or no?
Come again, I didn't get you.
So the
Anti-dumping. Okay,
dumping, yes.
anti-dumping is for all products, ceramic, porcelain, everything. Now, also to answer one of the things, like even though the demand of ceramic is going down, what we have done at Almaha is that we are not into commodity products wherein the products are being sold just based on the prices, because in ceramic there is also one company called Eagle Ceramics in Sohar, where they are bringing in material or something from India and selling at a very cheap price. So if we really want to survive, we cannot have those prices. So we have gone ahead and introduced products with the surface effect, with the R11 tiles, with the thick tile, very innovative surfaces, which is adding value to our products. Also antibacterial and barrier tile. So in ceramic also, a lot of product innovations are happening just to beat the competition and keep us afloat in terms of premium segment.
Thank you, sir. Thank you for your answers. Thank you very much.
My pleasure. So I will request Mr. Sandesh Shetty to please ask whatever questions he has.
Yeah, hi. Am I audible?
Yeah, you're audible, but if you
Yeah.
can speak louder, it will be better.
Yeah, thank you. Thank you for the call. And just I have a couple of questions with respect to the market right now. You mentioned that the porcelain is 70%, 85% of the total market. Am I right in this? So this is the local market you're talking about, right?
No, I will. In fact, what I said, that total potential of porcelain is 70% in the region. Whereas if we talk about projects, which is institution, commercial, buildings, so there the requirement is 80 to 85% porcelain, 15% ceramic. But our market primarily comes from in Oman refurbishment segment, which is like people making their own houses. There's hardly any high investment coming up in terms of the big malls or something like Dubai, where like real estate is booming. So if I talk about UAE, especially Dubai, 85% is porcelain, 15% is ceramic. If I talk Oman, 65-70% is porcelain, 30% still remains ceramic. I hope it clears.
Yes, yes. Thank you. Second question is on your revenue mix. How much of your total revenue is from exports? Like you mentioned, there are some issues with, like, there are current issues with Qatar, Bahrain, and KSA. Like, I just wanted to understand your export mix. Like, what percentage is from these regions?
So I will, I think I try to explain that since this war erupted in the month of March, so January and February, we were able to supplies to countries like Qatar, Saudi Arabia, Bahrain, and all these places through the shipments. Now, after this war has started, the business has come down drastically. Now, our consumption of material or the sales presently are happening in only two countries mainly. One is Oman, which is around 60 to 70%, 60%, and 40% from UAE, with a small quantity going to sometimes to Yemen or to the countries which are able to utilize Salalah port or something, because the port or wherever shipment comes, it becomes a totally non-viable. So if you have to understand, since March to date, our market is mainly two market. One is Oman and second is UAE. And our consumption is coming out of these two market.
Okay, okay, got it. Thank you. Also, you mentioned on the expansion at your Sohar plant. Like, can you shed some light on like your capex? What would be the capex and what the capacity would be like? Any?
So I think this was announced in MSM 6, 7 months back. We are going with the expansion of porcelain tile in Sohar. This will be to sustain our business of Almaha Ceramics as a company, and this will be on latest technologies in terms of the porcelain, wherein we will be targeting the bigger sizes and also the sizes which are not so common, along with the normal sizes. So it will double our capacity of Sohar plant. CapEx and all we will announce soon in terms of how much is going to be the CapEx investment. But this is already in, and I think we are working to get it, things move very fast on this.
Okay, okay, thank you. Just one last question you on the new innovative products like the antibacterial and the cool tile. Just wanted to understand the margin and compared to the normal tile, like how would be the margins for these new products? Like it would be better or it would,
See, I will tell you this R11, R12, which are anti-skid tile, very, very popular in the markets of Europe or in matured markets like Dubai, in matured markets like Jordan. The people are coming and asking that what is the grade of anti-slip property of the tile. But I think Oman has got a long way to go in terms of customer understanding, but slowly it is coming up. So these products are futuristic product if I have to talk about our market. But at the same time, we are creating a image in our market or in mind of the customer that it is Almaha which is giving you generation next product. Antibacterial tile was launched before COVID. We never knew COVID is coming, but this gets rid of your antibacterial, your bacteria and microbes, even virus, to the extent of 99.9% for the lifetime. Now, slowly we are pushing it to Ministry of Health, schools. They are understanding and taking. So if you talk about, these are not a very high volume product. Even Barrett, which is a cool tile, it is not giving you volume, but it is giving you revenue, high revenue, and also high margin, and also a huge impact in terms of premium brand positioning in the market. So these are, when you're creating a product basket, there are certain commodity or fast moving voluminous product, and there are mid-level, and then there are niche products which are not sold in terms of volume, but in terms of value. And also to make the customer aware that if they are looking for anything which is the next generation, it is only Almaha where they can approach.
okay, okay. Thank you, team. Thank you so much for the answers. Thank you.
Thanks, Sandesh. Have a good day.
Yeah.
And can I request Mr. Ali, he can ask questions?
Thank you very much for your for the presentation and your responses. Regarding Al Ha'el, since you're saying things are getting better, do we expect any reversal of the provisions that have been, taking place for the past few years?
Can you speak louder, Mr. Ali?
Yeah, sorry. So I'm talking about the Al Ha'el provisions that have been made in the past for the past few years. Are we expecting any reversal for those provisions, especially that it was mentioned that the production has been good and sales are also good? So do we expect that, Mr. Rajiv?
Provision in Al Ha'el.
Al Ha'el, yes. We took a lot of provisions at Almaha ceramic level. you know, on the accounts because it wasn't doing well, no? But now you see, yeah. Is it clear, my question?
Oh, actually, Mr. Ali. So, Vikas, have you heard him?
Yeah.
So, will you answer?
Yeah.
Please
Sir,
speak louder.
we already write off our provision investment, but we are not going to reverse up till the equity become positive.
Which equity? Sorry, I didn't get your answer. What do you mean, which equity?
Al-Hind.
Almaha equity in Al-Hind.
No. Yeah, Al-Hind. Equity become positive, then we are going to reinstate our investment value.
So how far is that? I mean, what is the financial position of Al Hail? Because we can't see that. So can you give us a bit of clarity on that as well, please?
That is in progressive state. If you
So, Mr. Ali, I'll answer to that. Like, I think it is too early for this to comment. And this is also a part of what Mr. Shaur from Vision has asked. I think the plant, which was never started, got started in November. And most part of it, we were able to start the plant and sell only 12.5% capacity because even one line running it at a full capacity was a challenge because of manpower. Now, last 3 months, we have started selling 100% capacity utilization and we aim to start line 2. Unless we have 2 lines running successfully, there will not be a positive cash enough to look at the light, what we are looking at in terms of our, seeing something which is taking care of these impacts. So I think we have to wait and watch in terms of let the 2 line start and that also successfully for consistently for next 6 months. And then I think we will be able to comment very clearly on that how the picture looks the other end.
Great. Thanks for your response. Regarding the expansion at Sohar, now you are going to expand into the porcelain segment.
Right.
So is it not like competing with Al Hail porcelain segment as well?
See-
Because Al Hail is all porcelain.
See, these are not something I can say that competing with your internal brand. This is like complementing your brand because size which are limiting at Al Hail, we are not able to produce. We will be able to produce here like 1200 by 1200, like thickness by 18 to 20 mm, 75 by 75, 800 by 1600, everything we can make. Secondly, let me give you a brief of this market and the region. Like the potential of this market is of Gulf is around 600 to 700 million square meter. 6 to 700. Now, our capacity of Al Maha is 5 million and Al Hail is around 18 million. Now, we have a long way to go in terms of keeping our, market presence, in terms of keeping us, in terms of really a player which makes sense. If you talk about RAK, their capacity is 113 million square meter, Saudi Ceramics 63 million. Why they have a high capacity? Because unless you have a high capacity to produce, you will not be able to serve the market. The market which is transforming into a porcelain market, it is not like A versus B, it is like A plus B. So 2 plants will force you and give you a leverage to grab the highest market share of this market, where somebody having 1 line or just a plant which is not able to service the market, they will not have volume or the size or the product basket to compete in the market. So I can say that even if we bring another plant like Al Hail, it will complement us.
Great, sure. And so it's going to be an expansion. How would you finance that expansion? I mean, are you going to raise some debt or equity or a combination, or this is to be disclosed later on?
You are talking in terms of finance of the project?
Yes, sir.
So that, in fact, we are a debt-free company. So that way, I think we can always take the help from the bank. And that stage is yet to come. That how are we going to finance? Because we are in a process of finalizing technology and also the cost. Once it is done, I think you will be soon aware of how we are financing and what is the total capex cost.
Great. Okay. The other question regarding the increase in revenue, is it primarily because of the increase in price or because also increase in volume, especially for the second quarter?
I think
Sorry.
majorly by volume, because if I have told you our capacity utilization of Almaha has gone up to 95% and entire orders are back to back. It is not like we are making to increase our stock. We are making to sell it in the market. So while stock position has come down as compared to last year, finished goods stock, our capacity utilization has gone up. So volume has moved up significantly. Plus, it is further complemented by the volume of Al Hail ceramic, where the value per unit is almost double the normal ceramic tile. So this both has added up in terms of revenue increase, plus also a little contribution coming from increase in prices. But since it is HY1, the impact is not properly visible here. Maybe in coming quarter, you will see it better.
Great. Okay. One more question regarding we see a lot of new developments coming in Oman. Like we have Sultan Haytham City, we have a lot of projects coming in. How do you make sure that you are getting your share of these, new developments? The Ministry of Housing is doing a lot of effort. Everyone is putting a lot of effort to have new developments, whether residential, commercial, buildings, and all of that. So how do you take advantage of this current boom in situation in Oman? Yes, please.
Yeah. So I think what you mentioned is one of the most exciting part for any local manufacturer. There are certain other complementing factor which I mentioned, that anti-dumping, which has been introduced by government of Oman, which is impacting cheap imports. Second is Made in Oman quality mark, which is coming on the product and also making it mandatory. So far when we were approaching Ministry of Housing or Ministry of Education, they were telling us that, see, you do not have full body porcelain or porcelain in Oman, so we are compelled to buy it either from India or UAE because Made in Oman products are not there. Blissfully, Almaha will be the only company to produce whatever thickness, whatever size, whatever product, and even the your technical porcelain, which is full body porcelain, which is being recommended and is specified in all the government projects, we will be able to get a major chunk of that. Now, just to inform you that we got some major orders from Ministry of Housing and Ministry of Education, and that has come to Almaha Porcelain because of quality and Made in Oman impact, and that we are looking at. We have created actually a separate team to capture these segment which was earlier being done, like the same person going and very casually approaching. We have created a full team which will be site by site government offices, specifications. So we are very, very excited and hopeful that this situation will really keep momentum growing. And as a Made in Oman company, we will be able to give our products at least 60% consumption within Oman.
Great. And how do you see the remaining part of the year? I mean, in terms of profitability?
I think we are looking, much better performance as compared to last year, this year, in fact. And I think HY2 is, we really don't know how the war situation will be, how it will further impact in terms of cost input. And keeping everything same, I think we will have the momentum going and we will have a better results by the end of the year.
Great. Thank you very much.
Thank you, Mr. Ali. Anybody else who would like to ask question? Shaur, you want to again ask something? Please go ahead.
Yes, sir. Just a small follow-up. The new Sohar expansion will also be porcelain, right? So, I mean, I know you touched upon this recently, but what exactly will be different? And is it true? Is my understanding correct that your current Al Hail plant is not able to produce what you intend to produce in the new Sohar expansion?
New Sohar expansion, you're talking about Almaha, or you're talking about any competition which is coming?
Uh, I was talking about Al Maha, but if you could give us the details of the competition, that would be great. Also, thank you.
No, so I think you must have seen in the news that there is a Chinese company which has also signed some deal in the free zone to bring in one porcelain plant. See, I think going forward, we have to be very clear that to beat the anti-dumping, the Chinese companies will keep on coming and putting up the plant in the country itself, like they did it at Saudi Arabia, Jordan, and many countries, and Oman is also not away from that. But one good part is that while they focus on high volume, low price, we are not into that segment. And from, as I explained you in the beginning of my presentation, we are trying to move out from the commodity segment, which is going to be a very price oriented and low margin products. So I think mid and premium segment, the competition is less. Volumes are something which matches your capacity. And I think that's the way to sustain and grow further. And what was your question for Al Maha expansion of porcelain versus? Can you just repeat?
Yeah, so the new segment, the premium segment that you are targeting would be catered by this expansion of Al Maha, right? In porcelain, the new one in Sohar.
So I think I explained you the plant will take to commission maybe is 18 months to hardly 2 years. By that time, if I have to really foresee the market where it is going, I think demand for larger sizes, higher thickness will be more. And also the world is changing towards the surface innovations. So the machineries which are complementing to give you a finish of a stone or rough or whatever you want to, or full body through and through, designs which are futuristic designs and fetches you a high premium, prices. So that will be focus on that. And logistic wise, I think for sure both plant will not produce same products. It will be something wherein you have to complement that what all products you need to produce at plant A and what all in plant B, and how logistic can support us in getting into the catchment area, because porcelain is a very heavy material and also logistic plays a very important role. So keeping one plant in say Sur and then fetching it all across the region is not going to help us. So we may also decide that maybe we decide to have a few catchment areas serviced by plant A, few servicing by plant B, or the different sizes. So opportunities are immense. I think once it comes, I think I can also say that after 2 years, we may go again for doubling the capacity of porcelain at Sohar. So that's exactly how I look at.
Great. Okay, because the small confusion that we had in our mind is when there is already excess unutilized capacity at Al Hail, why is the company going for another
No, I
expansion in
will, I
Sohar,
will,
right?
I will correct you. It is not unutilized capacity. One is that you are starting the plant. You require what? You require raw material. You require manpower. You require lot of things in the plant. It cannot happen all of a sudden. Like even for getting 5 recruitment, we are struggling like anything from the authorities. So slowly we are going ahead and trying to do that. So once we say and compare it with the ease of doing business as compared to the countries, for example, highly, which is in global presence, India, I think you have to just start the plant and things fall automatically. So if everything falls good, Al Hail can run all the 4 lines, and there is a demand presently to capture those lines. It's not that you are struggling to sell the product and not able to run the plant because of that. Present situation, there is ample of demand which can take care of even 4 line of yours. But running the line is not easy. It requires a lot of synergies, And that we are overcoming slowly, one by one, in terms of working capital, in terms of manpower, raw material, and other things.
All right. Okay. Thank you, sir. Thank you for your time.
Yeah, Mr. Ali.
Sorry, I have one more question. I just wanted to know your arrangement with Al Ha'il, because you mentioned that you take 3% share of their revenue or something. However, you are responsible to run the factory. So can you just shed some light, more light on your arrangement with Al Ha'il? Since I know it's associate, so just can you briefly give us a bit of more understanding on
Okay.
the arrangement? Thank you. Thank you.
Okay, so as you are aware, Al Maha owns 45% of a stake in Al Hil, right? And 55% of his stake lies with the Qatari owners who are presently in Qatar and not very active in terms of day-to-day operations or any involvement. Now, the management agreement which has happened at the time of 2022, that Al Maha, being an expert in the segment, will run the plant and also will try to create a market with the present sales force what Al Maha already has it with them. Now, the present arrangement is that Al Maha is buying the, or maybe the taking the products from Al Hil and selling it under Al Maha branding, which is the products in the market is Al Maha porcelain produced by Al Hil, and the margins what we are keeping is 3%, which is net profit of all. So these products are sold by the same team which we have. The major backend team is also same, which is purchase, technical, or IT, or finance. Everybody we are same. So this is like a parental support to a plant which is struggling. Idea is that, and we have also got an agreement from the bank that we will try to put extra cash into Al Hil so that it starts creating its own cash flow. And as I mentioned, that if two-line runs for next maybe 2 years, there will be enough cash to repay the debts and also, clear the things, and we can see a very bright future. And same way, like if we start line 3 after say 6 months or line 4 after a year, it will have a much better situation. And I am seeing that we will not stop at line 2, but line 3 and line 4 also will be taken care of.
Great. So is it profitable now? So are you really generating the 3%, Mr. Rajiv?
3% of the revenue.
Sorry, revenue, not net profit, right?
Yeah, the net profit is very less. Revenue, like I explained, Mr. Ali, if 100 we are selling, 3% of that comes to Al Maha as a net profit. It adds up to our profit.
Yeah, great. Thanks.
Which is a very minimalistic approach. I think somebody may ask that why you are not asking for more. But idea is that to make Al Hil stand first rather than, making money out of it.
And this is like intentionally done currently, but later maybe revised, is it?
Yes, of course. Like suppose there will be few products which will be fetching margin to the tune of 39 to 50%. So there is no point sharing 3% there. So we are already in process, like, normal product is fine. But if the products are fetching more than 25% margin, Al Maha should also get better share.
Yeah, because we invested quite hefty on it, I think more than $1.5 million, isn't it?
Right, very true.
Great,
Thank
thanks.
you, Mr. Ali. Any further questions? Who?
Maran.
Huh?
Maran.
Maran. Yeah, please go ahead, Maran. Like Maran, I have not seen. Anybody else who will be interested to ask question? Any question from you, Mr. Ali? Shaur, I think your questions not ending. Please go ahead.
Sir, actually, these calls are are very good opportunities to interact with the management and ask
Please,
all the
please.
questions we have.
I'm
So,
happy to
we'll want
answer,
to
please.
make the most of it. Thank you. My question is just regarding a small understanding of the financials actually. When you say the 3% of every tile, every porcelain tile sold by Al Maha for Al Hail is recorded in the revenue. In the top line, do you record the full 100 and then you take 97 out under the cost of
Cost
goods
of goods.
sold, or is it that you only
Yes,
add 3
yes.
to the top line?
Yes, yes, and we are showing it as a revenue coming from associate company, not as a part of Almaha, to make our investors be very clear what is there. So you're right in saying that 97 goes into COGS and 3% comes as a net profit without any S&D and other expenses on that.
Okay, all right. So whenever we see an increase in top line, it can be as a result of both
Yes, and our
of one.
financials also will mention very clearly what is the revenue share of plant Almaha, plant Al Hail.
Perfect. Thank you. Thank you.
Thank you. And anyone else, any questions? Or I hope I've answered all possible questions. Okay, Sandesh, please.
Yeah, sorry. One just last question on the capacity side. Like you mentioned, Al Hail has 18 million, right? Uh, you mentioned the capacity for Al Hail and Al
Yeah,
Maha
yeah.
Ceramic.
See, capacity, I will tell you what it is a little dynamic figure because it all depends on what sizes you are producing. So, for example, if you are producing 60 by 60, one line can give you 10,000. Same line, if you produce 60 120, it will give you 8,000. Same line, if you produce 60 by 60, 20 it will bring it down to 5,000. So, capacity utilization is based on the basic size, but actually, what you produce in terms of our product sizes, so that all matters.
Okay, okay. Thank you. Thank you.
So when we say 18 million, it is purely based on the base size. But when you decide to run the plant with a particular size, then I think you have to calculate and inform that my capacity was, say, to produce 200,000. Out of that, I produced only 180,000. So this is my utilization. Not that I calculate from the base and I produce something very high or big, which has got a very high cycle or low production cycle. So that's not fair to inform.
Okay, got it. Thank you, sir. Thank you.
At any point of time, if you have any questions, you can reach me out and I will be happy to answer. And that is for everybody. And thank you, everyone. Thank you so much for taking out time and attending the meet. And wish you all a very good day. And we look forward to have the same, meeting after the end of quarter 3. Thank you so much. Thank you.
Great. Thank you.
Dr.